If you think you're falling behind because you aren't working hard enough, you've already fallen for the first lie. The truth is much darker. You aren't just paying more for eggs or gas. You are being systematically bled out by an economy that has decided your home equity is its next meal. We've entered the era of the silent eviction. This isn't a sheriff knocking on your door to move your boxes to the curb. It's the invisible drain of your purchasing power, your skyrocketing taxes, and your vanishing savings. If you don't recognize the trap being set in your bank account right now, the math is clear. You will be a renter in your own house within 5 years. In exactly 12 minutes, I'm going to reveal what economists are finally forced to admit, something called the asset-labor decoupling. It is a mathematical cage that explains why a $100,000 salary has become the new poverty line for anyone trying to own a home in America. I'll show you the terrifying reason why your bank is desperate for you to keep your money in a savings account while they use that same money to buy the very streets you live on. But we aren't here to just watch the ship sink. By the end of this video, you won't just understand why the middle class is being liquidated. You'll have the exact 3-step hard asset shield. This is the blueprint that smart, informed families are using to flip this crisis into the greatest wealth transfer of our lifetime. Welcome back to Nation House Discovery. For our new subscribers, this is the only place where we strip away the corporate jargon to show you the raw truth about the real estate market, the economy, and your survival. We don't just report the news, we reveal the system. If you're tired of being lied to by the everything is fine media, hit that subscribe button, drop a like, and share this with one person you don't want to see lose their home. Let's get into the math they don't want you to see. Think back to 5 years ago. You had a plan, you had a budget. You thought that if you just hit that next promotion or saved an extra 10%, you'd finally have that moat of security. But something changed. You hit the milestones, but the goalposts didn't just move, they grew wings and flew away. Last year alone, the median home price in the U.S. jumped, while the average middle-class salary effectively stayed flat when adjusted for the real cost of living. This isn't a market cycle. It's a decoupling of your time from your wealth. For the first time in history, the American dream is being guarded by a paywall that labor alone cannot climb. To understand how deep this goes, we have to look at the one thing that should be your greatest protection, but has instead become a target on your back, your equity. Go to your front door and look at the deadbolt. You think that piece of brass makes you the master of your domain? Think again. The biggest lie we've been sold is that a deed in a drawer equals ownership. It doesn't. In the current economy, you aren't an owner, you're a tenant with a very expensive illusion. If you don't believe me, try missing 2 property tax payments, or watch what happens when your home insurance premium spikes by 40% in a single year. You'll find out very quickly who really holds the keys to your life. Take a look at Marcus. He's 38, works a safe corporate job, and did everything right. He's never missed a mortgage payment in 10 years. His lawn is perfect. His credit score is stellar. By every traditional metric, Marcus is winning. But every Friday night, when he sits down to look at his bank account, a cold knot forms in his stomach. Despite the raises, despite the record-breaking stock market, Marcus is poorer today than he was 5 years ago. His house is worth more on paper, sure, but his insurance has doubled. His property taxes were reassessed at a market value he can't actually afford to live in. His groceries cost 30% more. Marcus is experiencing the silent eviction. This isn't the dramatic scene you see in movies where a sheriff throws a mattress on the sidewalk. This is a slow, quiet, mathematical strangulation. It's the realization that the system has designed a world where you can follow every rule, pay every bill on time, and still be priced out of your own neighborhood. According to recent data, the cost of owning and maintaining a home, insurance, taxes, and utilities is rising at nearly triple the rate of middle-class wage growth. That gap? That's the sound of your middle-class status being liquidated. The system isn't asking you to leave, it's just making it impossible for you to stay. And the most terrifying part isn't what's happening to Marcus's bank account today, it's the realization of who is standing on the other side of that drain, catching every drop of equity Marcus is losing. Because while Marcus is struggling to keep his head above water, there's a specific group of people who aren't just surviving this, they're engineering it. Most people wake up feeling rich because their Zestimate went up. They see that $100,000 gain in equity and feel like they've finally won the game. But that feeling is a hallucination. Welcome to the inflation equity trap. It is the most sophisticated psychological trick ever played on the middle class. Here's the cold hard math they hope you never do. If your home value shot up 20%, but the cost of the next house you'd actually want to move into went up 30%, you didn't get richer. You just lost 10% of your mobility. You are house rich and opportunity bankrupt. Your wealth is trapped in a brick-and-mortar cage that you can't sell without becoming a victim of the very market you think you're beating. Your home equity is melting, but the banks have a very specific solution for you. They call it the HELOC, a home equity line of credit. They send you those glossy letters in the mail telling you to unlock the value in your walls. They want you to take that hard-earned equity, the only real wealth most families have, and trade it for a new kitchen, a truck, or a vacation. Why? Because the bank knows something you don't. They know the dollar is losing value every single day. They want you to take out a loan against a hard asset like real estate and spend it on soft assets that rot, rust, and depreciate. They want you to trade stone for sand. By the time you pay that loan back with interest, the dollars you're giving them are worth less, but the house they now have a bigger claim on is worth more. They're literally tricking you into selling your home back to them one renovation at a time. This isn't just bad luck, it's a loophole designed to strip the middle class of their only remaining leverage. Every time you tap into that equity to maintain your lifestyle, you are participating in your own liquidation. You're trading your children's inheritance for a lifestyle that the economy is already trying to steal from you. And if you think the drain on your wallet stops at your front door, you haven't seen what's happening to the very currency you're working 40 hours a week to earn. Because as bad as it is to have your equity melting, it's nothing compared to the invisible tax currently eating your paycheck before it even hits your account. Your bank account isn't leaking. It's being drained through a straw you didn't know existed. Most people think of their mortgage as a fixed cost, a safe, predictable number. But that fixed cost is a myth. Every time you walk into a grocery store and see $8 eggs or a $6 gallon of milk, you aren't just losing lunch money, you are losing the ability to ever truly own your home. See, every extra dollar the economy steals from you at the checkout counter is a dollar that cannot go toward paying down your principal. You're being forced into a trade-off. Feed your family today or own your roof tomorrow. It is a slow-motion transfer of your life's work into the pockets of the people who control the supply chain. But that's just the visible side of the squeeze. The real betrayal is the invisible tax. You worked hard, you improved your credit, you bought into a good neighborhood and watched your home's value climb. You thought you were building wealth, but the government sees that appreciation differently. They see it as a reason to reassess your property. Suddenly, because your house is worth more on a piece of paper in a city office, your annual tax bill jumps by $3,000, $4,000, or $5,000. You didn't get a raise at work, your house didn't magically grow an extra bedroom, but you're being forced to pay the government for the privilege of your neighborhood becoming more expensive. This is the government's version of a silent eviction. They aren't taking your home, they're just making it so expensive to hold that you'll eventually have to sell it to someone who can afford the new entry price. And usually that someone isn't another family. It's a corporate hedge fund with an infinite checkbook. You are being taxed on wealth you can't even spend unless you sell the roof over your head. It's a brilliant, brutal trap. The more successful your neighborhood becomes, the harder it becomes for you to stay in it. You're being punished for the very thing you were told to strive for.
And while you're sitting at your kitchen table trying to figure out which bill to skip so you can cover the new tax assessment, a very specific group of people is watching your struggle, not with sympathy, but with an appetite. Because in this new economy, there are two distinct tracks: the people being liquidated and the people who have figured out how to turn your survival into their profit. The middle class is being quietly split into two new castes, and your bank balance is the only thing telling you which one you belong to. We are witnessing the birth of a new feudalism. In the old world, the hero was the saver, the person who put in 60 hours a week, lived below their means, and trusted the green paper in their wallet. But in this new reality, the saver is the ultimate loser. If you are working for a currency that is losing 7 to 10% of its actual purchasing power every year, your hard work is just a donation to the system. You are running a race where the finish line moves 3 miles for every 1 mile you sprint. But while the saver is drowning, the arbitrageur is ascending. These are the winners who understood the secret. They didn't use their own money to get ahead. They used cheap debt to lock down expensive assets. They bought real estate with fixed-rate loans, effectively betting that the dollar would lose value. And they won. As the dollar shrank, their debt shrank with it, while the value of the dirt they owned went through the roof. This is the great decoupling. It's why you see a 24-year-old TikTok investor driving a Porsche, while a 50-year-old engineer is wondering if he can afford to retire. One is trading time, the other is trading math. But the most dangerous players in this game aren't individuals, they are the giants. Wall Street firms like BlackRock and Vanguard are currently engaged in a massive land grab, outbidding middle-class families with all-cash offers, often 20% above asking price. They aren't buying these houses to flip them, they are buying them to hold them forever. Their goal is a nation of renters, a world where the American dream is a subscription service you can never cancel and never own. They want to turn your neighborhood into a portfolio and your family into a line item on a quarterly earnings report. They aren't just buying houses, they are buying the future sovereignty of the middle class. They know that if you don't own the roof over your head, you are essentially a serf to the person who does. And as these corporations tighten their grip on the housing supply, they are creating a pressure cooker that is about to explode. Because when a family is pushed to the brink, when they realize the game is rigged and the players are giants, they don't just get angry, they get desperate. And that desperation is exactly what the system is counting on to trigger the final, most heart-wrenching twist in this story. What if I told you that you could pay off every single cent of your mortgage, hold the deed in your hand, and still be forced onto the street by a company you've never met? This is the insurance betrayal, and it is the final nail in the coffin for middle-class stability. Across Florida, California, and Texas, thousands of families who have spent 20 years building their lives are hitting a wall they never saw coming. They didn't lose their jobs. They didn't overspend. They simply opened a piece of mail and found out their insurance premium didn't just go up, it tripled. Or worse, the company simply said, "We're leaving. You're uninsurable." This is the WTF moment that should keep every homeowner awake at night. If you can't get insurance, you are in technical default of your mortgage. If you don't have a mortgage but can't afford the $12,000 annual premium, you're forced to sell. But who buys an uninsurable home? Not another family. This is the twist. The system isn't broken, it is working with surgical precision. When a middle-class family is forced to sell because of uncontrollable insurance spikes, the buyers waiting in the wings are the same corporate giants we just talked about. These firms don't need traditional insurance, they are self-insured. They have billions in liquidity. They are waiting for the insurance crisis to shake the fruit off the tree so they can catch it. It is a massive, coordinated transfer of property from your family name to a corporate ledger. They are leveraging climate risk and actuarial data to do what a recession couldn't: strip the American homeowner of their last remaining asset. The message from the system is loud and clear. You can live here, but you can no longer own here. We are being pushed into a corner where the only way to survive is to stop playing the game by the old rules. Because the longer you wait, the more expensive the exit becomes. The clock isn't just ticking on your bank account, it's ticking on your window of opportunity to act before the costs become mathematically impossible to overcome. The door is locking from the outside, and most people are still arguing about the color of the curtains. If you've been sitting on the sidelines, waiting for interest rates to go back to normal so you can finally breathe, you need to wake up. The Federal Reserve's higher for longer policy isn't a temporary glitch. It's a structural ceiling designed to keep you exactly where you are. Every month you wait for a refinance that isn't coming is another month the system eats your equity in real time. The window to pivot, to move your money out of a dying currency and into a protected asset is slamming shut. But the system isn't just passive, it's predatory. Have you noticed those handwritten "We buy houses" signs popping up at every major intersection? Or the unsolicited texts offering you all cash, no inspection for your home? These aren't friendly local investors trying to help you out of a jam. These are equity vultures. They're circling neighborhoods where middle-class families are house rich but cash poor. They know that while your home value looks great on a screen, your bank account is screaming. They're waiting for that one emergency, that one medical bill, that one transmission failure, or that one insurance hike to push you into a panic. They offer you 70 cents on the dollar, promising speed and convenience, while they strip away a decade of your family's generational wealth in a 40-minute closing. They aren't buying your house, they are stealing your exit. The risk isn't just missing out on a good deal anymore. The risk is becoming the permanent underclass. If you lose your home now, in an era where institutional buyers are swallowing the inventory, you may never get back in. You are one bad decision away from being locked out of the asset market forever. The strategy that worked for your parents, working hard and waiting for the right time, is now a recipe for financial suicide. The predators are already at the gate, and they've realized that the most effective way to take what you have isn't to fight you for it, but to wait for the system to make you desperate enough to hand it over. But there is a way to stop being the prey. There is a specific set of moves that the people on the winning side of this wealth transfer are making right now to turn this tightening noose into a safety net.
Stop trying to save your way to freedom. You're using a bucket to bail out a sinking ship while the ocean is being poured in from the top. If you want to survive the great decoupling, you have to stop thinking like a worker and start thinking like a central bank. The strategy is simple, but it requires you to unlearn everything your parents told you about safety. You must move from saving to hedging. In an economy where the currency is being intentionally devalued, cash isn't a safety net, it's a liability. You need to move that melting paper into hard assets that inflation actually helps. This is where the FHA hack comes in. This is how regular people with normal jobs are beating the system. They aren't waiting until they have $100,000 in the bank. They are using FHA loans to put down just 3.5%. Think about the math. If inflation is at 10% and you own a $400,000 asset with only $14,000 of your own money in it, you aren't just protecting your savings. You are capturing the appreciation on the bank's money. Your 30-year fixed-rate mortgage is not a debt. It is a shield. It is the only contract in the world where the bank agrees to let you pay them back in cheaper dollars every single year while the value of the home stays pegged to the real world. As the price of eggs, gas, and rent goes up, your biggest monthly expense stays exactly the same. You are essentially shorting the dollar. But this requires a choice, a hard one. Are you going to keep working 60 hours a week for a paycheck that buys less every time it hits your account? Or are you going to start owning the things that get more expensive while you sleep? Look at your neighborhood. Look at the for sale signs. Are they being replaced by families, or are they being quietly swallowed by the corporate machine? In the story of Marcus, who was really wrong? Was it Marcus for trusting that the old rules still applied, or was it the system for quietly changing the locks while he was at work? The middle class is being erased, and the line in the sand is being drawn right now. You are either an owner of assets, or you are a provider of labor for those who do. There is no middle ground left. I want to hear from you, and I want the truth.
Do you honestly believe home ownership will even exist for our children in 20 years? Or are we witnessing the final generation of independent owners? The conversation is happening in the comments. Which side of history are you standing on?
Stop trying to save your way to freedom. You're using a bucket to bail out a sinking ship while the ocean is being poured in from the top. If you want to survive the great decoupling, you have to stop thinking like a worker and start thinking like a central bank. The strategy is simple, but it requires you to unlearn everything your parents told you about safety. You must move from saving to hedging. In an economy where the currency is being intentionally devalued, cash isn't a safety net, it's a liability. You need to move that melting paper into hard assets that inflation actually helps. This is where the FHA hack comes in. This is how regular people with normal jobs are beating the system. They aren't waiting until they have $100,000 in the bank. They are using FHA loans to put down just 3.5%. Think about the math. If inflation is at 10% and you own a $400,000 asset with only $14,000 of your own money in it, you aren't just protecting your savings, you are capturing the appreciation on the bank's money. Your 30-year fixed-rate mortgage is not a debt. It is a shield. It is the only contract in the world where the bank agrees to let you pay them back in cheaper dollars every single year while the value of the home stays pegged to the real world. As the price of eggs, gas, and rent goes up, your biggest monthly expense stays exactly the same. You are essentially shorting the dollar. But this requires a choice, a hard one. Are you going to keep working 60 hours a week for a paycheck that buys less every time it hits your account? Or are you going to start owning the things that get more expensive while you sleep? Look at your neighborhood. Look at the for sale signs. Are they being replaced by families, or are they being quietly swallowed by the corporate machine? In the story of Marcus, who was really wrong? Was it Marcus for trusting that the old rules still applied, or was it the system for quietly changing the locks while he was at work? The middle class is being erased, and the line in the sand is being drawn right now. You are either an owner of assets, or you are a provider of labor for those who do. There is no middle ground left. I want to hear from you, and I want the truth. Do you honestly believe home ownership will even exist for our children in 20 years? Or are we witnessing the final generation of independent owners? The conversation is happening in the comments. Which side of history are you standing on?